All right, hey everybody, welcome. We're going to talk about growing the pie. So how do we onboard the next trillion, $1 trillion, not users. My name's Casper. I'm co-founder of Spartan Group. We're a Web3 VC and investment bank based out of Singapore and Hong Kong. And we've got three panelists here today to talk about this subject. We're going to go through a lot of interesting points, also tied back to the stablecoin discussion we just had. But before we jump into that, I'll say ladies first and ask Jen to start by introducing herself, and then we can go down the line.
Hi everyone, I'm Jen, product at Stripe. I actually got a chance to join Stripe 4 years ago, right when we were actually just starting the crypto team. And I think it's been a lot of fun because we've been doing a lot of things in the crypto space, but more recently, I think in the past 9 months, a lot in stablecoins. And I think that's would be really cool to talk about is kind of how that intersects with what everyone else here is doing in the RWA space and kind of what the future looks like. So yeah, I basically own our stablecoin payments product, our very new stablecoin financial accounts product, our fiat to crypto on-ramp, and yeah, lots more to come this year.
Hi everyone, I'm Grace. I work for Citi. Citi is a large global bank. We have over 220,000 employees and clients in around 180 countries. We do have dedicated digital assets professionals for various lines of business. I belong to the markets team, so our working on capital markets use cases for this new technology. We also have digital assets professionals dedicated to our treasury and trade solutions team, our security services business, as well as wealth management. And within capital markets, I work on everything from tokenization of RWA to crypto.
Thank you, everyone. My name is Evgeny. I'm the founder of Re7 Capital. We're a DeFi asset management firm running about $1 billion across DeFi yield funds, providing on-chain liquidity, making directional investments in tokens and on the venture side, as well as running kind of robo-advisory style risk curation business with DeFi yield infrastructure.
All right, thanks for the intro. So let's kick it off. We just had a great panel on stablecoins, which was focused a lot on stablecoin adoption, especially. What I'm interested in for this panel is, so how do these stablecoins and how do stablecoins tie into RWAs? Because clearly there's, arguably stablecoins are RWAs too, but how does it tie into RWAs? How important are stablecoins for RWA adoption, and how do you see the two kind of interacting going forward? Maybe Jen, you wanna kick this off?
Sure. Actually, when I saw that question on the prep list, I was like, aren't stablecoins RWAs? So I was like, how am I supposed to answer this? But I actually think that the way that we've thought about it, especially in the past year, when we were building our stablecoin financial accounts product that allow any businesses accessible in 101 countries specifically that Stripe doesn't currently operate in today, I think one of the big questions we had to ask ourselves was why? Like, why would someone actually want to hold stablecoins? And I think the way that we came back to it was that it gave people all around the world easy dollar access that I am lucky enough to have already because I live and I'm from the US, but it's not necessarily true around the world. And not only do you get easy dollar access, you also get access to the rails that go along with it. So people can ACH and wire and SEPA in and out of the stablecoin financial account. And how it relates, I think, to your question is that I feel like how I would plug it in is that for other RWAs that would become popular, it's like easy blank access and its associated rails would basically be how we would think about it, which is like, is this providing something to a new geography, demographic, age group, et cetera, better access to something that someone else actually already sees a lot of benefit from? So you can actually see the things that would be interesting because some group like the US for the US dollar has already experienced like how great and the benefits of that, and basically being able to provide that easy access to folks all around the world or to a different demographic or just a different type of group. So I think that's kind of the high level, which is like we'll see products that will basically end up being able to facilitate and distribute that access to everyone.
Yeah, I agree. I mean, the two will be mutually reinforcing. So stable coins or any other form of tokenized fiat will enable more tokenized, non-fiat assets, and vice versa. On the payment side, you can create a lot of value simply by sending payments, right? So tokenized fiat, I feel, could exist on its own and add a lot of value that way. But with respect to the non-cash assets, you do need that payment leg to effect a large number of transactions. Otherwise, you end up with more like a barter economy. So yeah.
And yeah, maybe to kind of wrap this point up, stablecoins and RWAs are basically the same things, obviously, with a little nuance. But I think kind of the end game is we're going to have this kind of flat horizontal surface on chain where, a tokenized property, a tokenized stake in a private company, a stablecoin will all exist together and they all become programmable and interchangeable, and that's basically what the long-term game is. And then the only thing I would say is I think it's also very important for people to be extremely precise and strict on the definition of a stablecoin. Right? Part of the drama we had in the past was you basically had structured products presented as stablecoins, and that's what blew up the market a few years ago. There are people issuing stablecoins backed by real estate. Okay, maybe it's linked to a dollar, but it's a loan, right? It's not really a wrapped treasury. So I think we need to be even more strict about the definitions. Otherwise, non-professional people will lose money.
Yeah, that's actually a very good point. So in terms of tokenized cash, there's stable coins, there's tokenized deposits, there's deposit tokens, there's tokenized money market funds, and the lines do blur a bit amongst these categories as well. So very good point, to be precise.
And on that point, so we've heard about RWAs or STOs as they started back in the day, right, in kind of 2018 and kind of developed over time. And we've had various tokenized assets, real estate, so forth, and a lot of times they're thought of as kind of, you tokenize them and then people will buy them. So almost more like a B2C product. But how do you see RWA in general? Do you see them as a B2C product? Is it more B2B? Is it B2B to C? And do you see them being almost kind of behind the scenes in terms of used to generate US dollar stablecoin yield versus just being like direct investment objectives themselves? Like what do you see the role of RWAs as in this general ecosystem? And also to the point about driving adoption, is it going to be related to this question, is it going to be directly to consumer distribution, or is it going to be more like, well, I put my USDC in a wallet, I get a 5% yield, and I don't know behind it, but maybe there's a real estate token, there's collateralized auto loans and whatever generating that yield. Evgeny?
I think this question alone can take basically the full day to answer, and we probably won't even get to the full clarity there. So I think historically people have struggled to scale up RWAs because they've been basically selling them to the wrong group of people, right? So people who have been using blockchain so far have mainly been small-scale institutions or basically retail people gambling on the blockchain. Why would you want to gamble with something that can only give you 5% a year, where you can play a video game like DeFi experience and get much more? But what I think is changing is we're going to have parallel universes that exist. We'll have the old DeFi world where it's people just experimenting with a lot of things, and then there are going to be partially gated or non-gated chains where banks can finally do something, right? So do I think a random crypto individual should be buying tokenized farm in Africa? Well, probably not. Does it make sense for them to stop gambling on random coins and actually go and put money into tokenized, money market funds or whatever? Yes, absolutely. But I think, and what Robinhood announced yesterday with tokenized shares is making very clear they're going to be different parts of the blockchain world with different types of RWAs, and they will exist for different purposes, right? So if I'm a customer of if I'm someone who's using Stripe stablecoin, for example, right, I can go and eventually derive a lot of value from it, and then I'm probably a merchant or as someone else. If I am a bank that trades with Citibank, eventually we'll be able to settle some trades on chain, obviously, but then this will be gated, right? You have to be permissioned and regulated and whatever. So I think there'll be different pockets, and some of them will be B2B, B2B2C, some of them will be B2C, and I think it's very important for people to be kind of very sharp in terms of what is the style of the RWA offering that I'm building, whom is it a fit for, and then that will tell you where it should exist.
Yeah, I think that's an interesting question. I think as a product person, I always think about the end, like the actual user experience and how people, either consumers or businesses, and then the institutions powering them will actually experience the product that they're actually interacting with. So I actually think that for consumers, I don't think it's actually going to be obvious to them. I think they'll understand the benefits and they'll understand like the app that they're using to interact with something that they're curious about, but they're not actually going, like maybe a smaller portion of them are going to go into the details, but I think when you hit the mainstream, I think large swaths of consumers wouldn't know. So I was actually doing some research on like LATAM. So we were looking at like different fintech companies in Latin America and kind of looking at the top ones that actually serve consumers. And then you like look at the list and you're like, oh, this is interesting. And then you like look at each of those companies and like 80% of them are actually just like stablecoin fintech apps. So I think you'll see like a merge in the middle where like right now I think a lot of people have thought about fintech apps as kind of what we're already familiar with, things that have started in fiat. But I think you'll see both merge. So you have crypto native apps and fintech apps have the same features. So when you have apps that have the same features, are they fintech apps or are they crypto native apps or a little bit of both? Or does it really matter? I think for the consumer, it doesn't really matter. So as an example, like very concrete example of this, in our stablecoin financial accounts product, we actually were worried about businesses not really understand, like that they're holding USDC or USDB or like what is actually in it. So we did a bunch of like user research stuff and we decided to go with digital dollars for now to see what happens, do some more. But I think the idea is like we'll wrap into something that actually matters to them. And like I said earlier, that product specifically was for easy dollar access. So that naming made sense there. But I think if you look at the user experience, the consumer or even like the business acting as a consumer experience will kind of hide the details unless they're really passionate about it. Then they could go in the info button, do the research, and actually see what underlies everything. But make it easy for people, basically.
Yeah, I would hope that as the technology in the industry develops, that there is more transparency, so those details are easier to access, because I think that's a really important benefit that this technology allows, and that we should try to realize. But yeah, to your original question, I do believe it's all of the above. I do believe for individuals, like eventually you'll be able to directly access RWA, or you can have intermediate access. Like it's however you choose to invest and save.
Yeah, and eventually you won't even know, right? You will have an interface with your bank account, your fintech app or whatever, and with one click you buy something, and the backend rails won't even matter to you.
Yeah, so just on that point, there's a couple of points on distribution I wanted to pick up on. Just to the theme of the panel and adoption and getting the next $1 trillion in, do you view that it's going to be largely existing distribution channels, either B2B or B2B2C, like, you know, the big centralized entities that, you know, like Stripe or Citi that drive a lot of, not stablecoin necessarily, but the RWA adoption? Or is it going to be more kind of, you know, these fintech, new neobank, new fintech app type infrastructure is going to drive that adoption?
Yep, happy to start. I think it's probably logical to make an assumption that, you know, you're going to have early movers who by definition would probably be smaller, more nimble institutions with less to lose, especially on the neobank side. And then eventually, you know, the Citibanks of this world will come and eat everyone's lunch, as they always do. But also I think, you know, there could be even a different way how this can all go, right? People can come into this industry through fintechs, through banks, through gaming apps, through social media and other things, but it's probably the risk tolerance of a specific financial institution will be the driving function of whether they will or will not come in.
Yeah. I mean, I think to a certain extent it comes down to how effective incumbents are going to be at adapting to the new technology and adopting it. So within the payment space, like Citi has already commercialized tokenized deposits. So we call it the Citi Token Services for cash, as well as Citi Token Services for trade. So we have kind of on-chain cash, and it's also programmable. So those are capabilities that we've developed in-house, and that we have launched, commercialized. You know,
Is that available for retail users, or is it just like for internal settlement?
It's on our private blockchain, and we are effecting cross-border payments for clients settling millions of dollars
Right.
volumes. At
So
this
it's like,
point. Yeah.
it's the rails behind the scenes, so the users are not seeing the fact that,
Correct.
okay.
So the users don't need to understand the blockchain technology. They just know that now they can make a payment on a weekend, on a holiday, and there are no cutoff times. So they experience the benefits without having to have a wallet.
Got it.
Yeah, I think for us, I think the idea is that Stripe has always been in the business of money movement. So anything makes money movement more, basically easier to facilitate, more efficient, faster. I think those are the probably first things we would look at because it would solve problems that we have and have already identified. I think anything that's a little bit more creative than that, I think to your point, we'll look at what the interesting things are. We'll keep an eye out, but we have to meet our consumers and merchants where they are. And a lot of them are not in this room yet. So I think they have a lot, there's actually a very steep learning curve whenever we have those enterprise conversations. So I think, to be honest, I think a lot of the pieces will be how do we make our pieces kind of more efficient? And then on top of that, we'll watch for the use cases that become interesting, and then we'll meet them where they are. And then that's, I think, where we would start a larger type integration type thing. And I think that you'll see kind of similar, that kind of type of adoption probably mirror how people are thinking about doing something for themselves.
Okay, so related question in terms of these distribution channels, how important is, and maybe we kind of have some very crypto native type investor and DeFi right, and then more of the centralized companies. How important is decentralization for RWAs and for this entire ecosystem, both in terms of being trustless, but also in terms of running infrastructure, efficiency, settlement? Is it going to be increasingly centralized such that it's an RW, you still get the efficiency gains and you get the fractionalization, you get all the benefits, but it's maybe running on a permissioned or a semi-permissioned chain? Or is it going to be more like DeFi-ish, where it's really truly decentralized and a little bit maybe less controlled?
Yeah, so I don't think it matters too much as long as you're very clear on the trade-offs when you're offering this to your customers. So we are currently working with several neobanks and fintechs that basically want to be offering, let's just, to oversimplify, call it a yield button in their app. Right? And then they'll make it very clear that part of that capital may go into a fully permissionless DeFi vault with all the ethos and principles of DeFi, and something else might actually go into a much more centralized solution, because with RWAs, eventually it's going to be a physical asset, right? And you have to sue someone if things don't work. But also, I think this whole idea of DeFi kind of permissionless and decentralization, I think we left it behind a long time ago when we allowed for USDC and USDT to become the dominant instruments in the space, which is not to say it's a bad thing, but it's no longer a permissionless world, right? If tomorrow USDC and USDT decide to switch everything off, well, DeFi will collapse in a second. So we just accepted it as reality, and that's okay. We just need to be very, very aware of that. But in our conversations with, we partnered up with World Liberty, working with fintechs, working with some banks. The point of decentralization never comes up. It's more about how do you manage your KYC and AML risk and all the financial risks associated with that.
Yeah, I do see a world where it's both public chains and private chains, just like you have the public internet, but you can also have private intranets. And also, there are hybrids now where the lines are blurred. You may have a public chain, but they have a private permission subnet, let's say. So I think the trick ultimately will be figuring out how to make them interoperable.
Yeah, no, I think I was going to say exactly the same thing. It's as long as it's interoperable, and that means that they're able to adopt it but not be locked in and be able to access kind of all the benefits that they're able to get in and out of. I think that would be the key thing. But I do think it's interesting. It actually has been surprising when we kind of have a lot of these enterprise conversations, especially when we talk to them about stablecoin payments. I think even last year, it was still a lot of we don't actually want to touch the crypto. We just want you, please convert the crypto that I'm accepting back into fiat and just land it just like a credit card payment. But this year, I think it's actually changing a little bit. So, for example, like we launched stablecoin payments for Shopify, and they literally explicitly wanted to have both fiat and crypto settlement as an option for their sellers. So you link that back to all the like conversations that we're having here. Maybe people will actually start caring whether it's centralized or decentralized, even though their use case is very much one that we think is like not as crypto native, like they're just buying and selling goods and services. So we don't know.
What do you think has changed that mindset at the enterprise level? Is it the political environment in the U.S. that has shifted? Is it, you know, the fact that there's more institutional adoption in general? Is it the Bitcoin price? Is it just the size? Is it the Stripe acquisition of Bridge that was a wake-up call to people? Like, what changed their minds?
Yeah, no, that's a good question. I think it depends on the user. So I think it depends on the user and their use case. I think that if they are a merchant going after like Gen Z adoption, then to be honest, I think they probably were, moved by like maybe the political environment and also just like, you know, price action, things like that. If they're they're wanting to go more global, so their whole push is they really need to go global to expand their TAM so they can sell their good or service to a broader audience, then they are probably looking more at the acquisition. They're probably more looking at other players in the space that have adopted stablecoins to go more global and basically need to be able to catch up with them. So it really depends on the specific merchant and the use case and like what the enterprise is doing and what they care about. So it's a mix of all the above. But to get specific, like if they're going after like the global piece, I think it's a lot of like the recent stablecoin adoption space and basically seeing a lot of other enterprise get in. And it really just like legitimizes the whole space itself where it becomes really obvious. And it's something that kind of when they think through their exec team, it's something that they want and have discussed already when they come to the table now, which is really cool.
Got it. Okay, I think we have time for one more question. So in terms of onboarding the next trillion, obviously that's a massive number and it's not something that's going to happen overnight. So let's make it a little bit more bite-sized maybe. So the next, call it 50 billion, 100 billion onboarding in RWAs, where's that going to come from? And I'm not talking about stablecoin adoption, like actual, like let's say RWA that are not US dollar, like what channels are those going to come through? Is it going to be real estate tokenization? Is it going to be tokenized gold? Is it like, where do you think the initial move is going to come?
Well, I think it's an important nuance whether it's RWA assets anyone is using or they're just registered on chain, right? Because someone who owns, $1 trillion of real estate can go and tokenize it, but no one will ever touch it. If it's more productive things, like we're super excited about traditional merchants using stablecoins for payments because then they'll be sitting on idle cash and you might as well, turn it into, deploy it into RWA yield product. That's number one. And number two, I think we just brainstormed this a little bit behind the scenes on the tokenized shares, where, like I come from the hedge fund world, and if on a Friday night I have an ability to hedge my book over the weekend with tokenized shares, I would probably do that as long as there's enough liquidity. So I think there might be some utility to that use case beyond, people gambling 24/7.
So it'll come from Robinhood, basically.
Yeah.
Okay.
So you said no stable coins, because I was going to say, we have a research team, Citi Institute research team. They recently came out with a digital dollars report forecasting 1.6 trillion of stablecoin market cap by 2030. With a bull case, that's the base case, bull case in the 3 trillion area. So that I think is probably the more obvious projection to make. But if it's non-cash, I continue to think the private markets, there's a lot of value proposition there, like in terms of being able to provide better access, better liquidity. So I would guess tokenized private investments. Oh, okay. All right.
I think for me, well, actually, my first reaction to this is that I think it's interesting because I think in this space, we think about the numbers in terms of dollars. And I actually think that what is more powerful is if the number is in terms of the number of people. like how many users there are. So when I actually read the question, I was like, I don't think there's a trillion people in the world. I don't know how we're going to get there. But I think that in terms of user adoption, the product experience and kind of how easy it is for people to understand what they're doing and also see the benefits of it, I think that is like my initial answer. But then my secondary answer, and a problem that we actually currently see today that we would love to be able to solve, is FX. I think that would be really interesting. Like you were talking about how it's really just like the US dollar that's like on chain, if you will. I know there's others that are as well, but I think it would be really awesome if we're able to make FX markets more efficient and 24/7 and have better pairs and like thicker markets, if you will. I think that would help with the global by default vision that everyone has been selling about stablecoins. But I think what people aren't talking about is really hard to still get back into local currency when you want to.
Okay, great. I see time's up. Key takeaway is very doable to get to the next trillion. Just a question of when, not if. Obviously, stablecoins will be the main driver of this, but the RWAs are very closely tied in with these stablecoins. So thank you again to the panelists. Thanks, everybody, for listening.
Yeah, thanks, everyone.